What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol AUPH for Aurinia Pharmaceuticals. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. Now, we did cover this one way back here during earnings, but that's no longer really relevant. Clearly, there's been some large price movement to the upside since then. So let's scrunch up this chart and start out by mapping out obvious areas of support and resistance from the daily perspective. Certainly coming in, these are some downside levels to the upside. This breakout here strikes me as important, and also a little point of contention right around here. Let's scrunch the chart up a little bit, see what else we have off to the left here, and the most recent pivot high is way up here, close to that 2050 area. So taking a look at the 30-minute intraday data now to see if we got the levels right. Can we adjust anything? What else are we missing? Certainly looks about right. I mean, you can clearly see that this was the most important and recent breakout area, closed pretty strong. We'll look at the fibs in just a moment. Underneath us, this certainly acted as a level right in here. More importantly, this breakout from in here that led to this leg up. So I like that. Certainly down here, 1618, that's the obvious pullback from right there. So I'd say we did a pretty darn good job from that perspective. We'll take the fib, not fibs, actually, the support trendline tool out and do something like this, just so we have that in our back pocket as well, just indicating that we are in a clear uptrend. So anchor low way down here, first touch, second touch, third touch. Again, if we pull back into it because we did make a higher high, you would be looking at a buy point right in here. Again, some sort of hammer candle prints, any indecision doji, basically anything that would make you question, is this pullback right here coming to an end? Can we flip long over the highs, get back up into some of the upside targets, which we'll discuss in just a moment? That would be a great setup there. Tight risk, stop goes underneath the lows of whatever candle prints there. In terms of today's activity and how it actually unfolded, we always like to look at it through the lens of Fibonacci. So we'll take that tool out finally, go to the low of this morning, essentially, the low of this rally, and all the way on up to the highs. And you can see, let's drag those numbers off to the left actually so we can read them. You'll see that the 38.2, we obviously closed at the highs essentially, so that's no longer even in question. Any consolidation that holds that 38.2 is the most bullish outcome. That is at 1890, but I would argue because this is only about 20 cents underneath and it's also structural here at the 1872, happens to be the 50% fib. If we hold that, I mean, this to me is still just as bullish of an outcome than looking for the break up and over those highs that we've set today around 1925. If it happens over a period of time and coincides with that support trend line as we just discussed and horizontal area, great risk-friendly entry right there for a pullback buy inside of AUPH. Now, if it just takes off to the upside without us, what are we looking for? How are you essentially going to play this? I would argue first thing you always need to consider is how extended is the move from the daily perspective and who can potentially sell to me. So anyone who got involved in here is probably starting to look to take profits quite soon as we approach that 2050. So please be very careful if just out of the gates this thing starts moving towards that number and you're thinking about buying as it's just below. Just take a second step back and just reevaluate, am I buying at the most risk-friendly point? I would have to argue probably not. So please be patient if that is the case at the bell tomorrow by 9:30. If we scrunch the chart up to see if there's anything else going on over 2050, let's go ahead and grab ourselves some more time here just to make sure that there's nothing looming overhead that we're blatantly missing. And look at that. See, it's always a good thing to look left because you can certainly see that there was another cluster of major highs up there at 2177. So please be aware of that as an upside target as well. As the chart currently sits, it looks extremely bullish. But again, in terms of getting a risk-friendly entry, you probably want to wait for some sort of pullback, or if it consolidates in this range, that's your entry, taking the break of these highs to get into some of those levels which we've just discussed. If we take out this area in here, we can't forget about the fact that there could be downside. The next major area to pay attention to would be 1757, reevaluate when we get here, and then down below at 1618. If we take out 1618, wouldn't be so interested in fishing for long, simply because remembering the daily structure, that pullback area, it's already done its job, right? So if we pull back into it, that would be an equal low and thus kind of, damaging the strength of the daily uptrend. I would look for opportunity elsewhere. So if you enjoyed the video, if you learned anything new, certainly let me know down below in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.